If you are anything like I was, then you are trying to go from your current situation as a struggling, unprofitable price action trader to a confident, successful, and profitable one, and as quickly as possible. Does that sound about right? In this short but powerful training, I'm going to give you the most powerful pieces of my trading strategy that took me from a trader constantly losing money to consistent profits and the growth in my account that I had been dreaming about. Once I began incorporating what I call value into my strategy, and I could literally see where price was going to and understood why it was doing it, then my profit targets began to increase from the typical 3-to-1 reward to risk ratio to 5, 10, and even 20 to 1 reward to risk, which began to swamp my losing trades. Now, these kinds of winning trades not only helped me start beating the market, but allowed me to start building real wealth for me and my family. And I will be sharing those same exact tools and strategy I use with you today. I'm going to break this training up into 2 parts to help you as much as I can. First, the best strategy in the world will not help you unless you first diagnose what is currently going wrong with your trading. And I'm going to give you some tactics that you can begin implementing today that will help you reduce your losses and improve your consistency. Second, I'm going to share my strategy with you that helps me consistently find the best price levels to trade from and the tools that I use to consistently enter and exit my most profitable trades. I appreciate your time and attention and want to provide as much value to you as I possibly can. My expectation is that you will walk away from this training changed forever. This information is that powerful. You could almost call this a mini profitable trading masterclass. So I encourage you to grab something you can write on and take notes. I want you to be successful, so I'm going to be straightforward and to the point so as not to waste your time. There are so many half-truths and flat-out lies within the online trading community. I want to help make the biggest impact I can in the little bit of time that we have together. You can't get results fast if you do not implement change quickly and effectively. You are here to learn how to become profitable, so let's get to it. First off, I know what it's like to learn all this on your own, and it sucks. The days, the weeks, the months, and years of the insane grind of fighting to become profitable. It took me almost 7 years to become profitable, and now that I'm 12 years in, I can tell you for a fact that it requires different knowledge and skills as compared to what most unprofitable traders are using to try to succeed. Not only that, but I am 110% convinced that you can learn to become consistently profitable insanely fast, specifically when you have the right information and then know how to implement it quickly and effectively. So let's dive in. As a trader, you have 2 primary goals. One is to learn to become consistently profitable, where your account is growing and not shrinking over time, aka account growth. And 2, to scale that growth to where your profits begin to provide extra income and then ultimately replace your current income and create the freedom you desire. This is an important distinction. You cannot begin to make real money as a trader until you learn to consistently produce a profit. If you cannot produce $5 a day on average, then why on earth should you be able to produce $50 or even $500 a day when the stakes are high and your emotions are even higher? Always keep this in the back of your mind. Consistent profitability is a skill to develop, while wealth building and real income from your trading comes from increasing size and leverage to that consistent trading process. So if you're not currently profitable, I want you to shift your focus to the need and desire to become consistently profitable in your trading first. Your future success will be the direct result of you being able to focus on this one thing. The entire online trading community has been brainwashed into believing that you can automatically skip goal number 1 of consistent profitability while focusing entirely on goal number 2, building wealth, which is completely false and is the main source of trader failure more than anything else. Most don't even realize that they're doing it. So let's talk about that. The fundamental process of learning consistent profitable trading is the same for everyone and can be broken down into a step-by-step process. And it looks something like this. Number 1, consistently read the most important aspects of price action so you understand what the market is trying to do. Number 2, get in sync with what is happening in your market so you have your finger on the pulse of what is happening right now. Number 3, know how to identify your trade entry for a great reward to risk opportunity. 4, enter your trade with confidence. Number 5, know where your stops will be placed and are most effective. 6, know where you will take your profits. And 7, track your results and adjust to get better. Only a simple step-by-step process of exactly what to do and why are you doing it is key here. You then optimize this process to create consistent results and then continually get better. These are the key ingredients to the formula of becoming consistently profitable. Clarity creates results. Now, this is obviously an oversimplification of the process, but what it does is it gives you exactly what to focus on. Where focus goes, energy flows, my friend. And with that, you can be assured that you are making consistent and meaningful progress towards your goal of becoming profitable. Now, if everyone's process to becoming profitable looks like those 7 steps, the key to outperforming really boils down to number 1 on the list, which is having a superior ability to read and anticipate what the market is doing and is trying to do, which is why I'm so excited to show you my process later in this training video. Now let's talk about what the typical trader's process looks like, which is how mine looked in the beginning of my journey, and you may see some familiar steps in here in your own. Step 1, find a strategy that you think will make you big money consistently. 2, start out trading too big and risking too much for your account size. Number 3, lose more money than you think you should. 4, begin to struggle with your execution as your losses compound and your account balance shrinks. 5, you begin to look for a new entry technique, indicator, profit-taking strategy, or whatever you think will start turning those losses into wins. Number 6, get mixed results, but you continue to lose money. And number 7, you find a new strategy that looks hopeful, so you abandon your current strategy for the new one, and then the cycle repeats. This is what I call the trader failure cycle. I know this process well because it was how I started, and then I got stuck there for years. I still see it all the time and everywhere in the trading community. There are 2 main problems here that are not so obvious at first glance. Number 1, just because it feels like you are making progress does not mean that you are actually making progress. How often have you learned something new and felt super confident about it, only to find out later on that it didn't work? And number 2, until you nail down the profitable trading process and then work hard at improving it, any significant change to your trading plan, rules, or strategy will start the learning process over. So that leads us to the question, how do you nail down the process of profitable trading and successfully implement the 7 steps to becoming profitable? Well, you have 2 options. You learn by yourself, by trial and error, or a profitable trader teaches you their process. 2 huge problems here. Problem number 1, in trading, there are a million things to learn, but you don't have tons of money to lose testing every single strategy, and you don't have a limited time that you are willing to waste. Your money and your time are precious. You worked hard for them, right? Problem number 2, most people try to learn everything they can about making money as a trader on YouTube, blogs, forums, Facebook groups, and from people they hope know what they're talking about, and hopefully help them begin to turn a profit. This turns a simple process, like I mentioned, into an overwhelming wasteland of information and strategies. So right now, I'm going to clarify exactly how you can get out of this trap and begin making real progress. Then I will show you my strategy, which beats the pants off of anything else you've ever seen. In order to stop the trader failure cycle, there are a couple of primary issues you need to address from the start. First, it is imperative that you stop the bleeding. Here's how I know that you're trading too big for your account size. If your next 10 trades in a row were all losers, how devastating would that be to your account? If you are currently not profitable in your trading, then you must reduce the size of your risk per trade. 100% you are losing more money than you need to while you're learning. Think about it for a second. If you're not profitable with small size, then how on earth can you possibly be consistently profitable with large size? So lower your risk while you are learning. Now, if that is not you, then congrats, you are ahead of most. And if that is you, then no worries, let's dial things back and get you on a profitable track. You cannot create profits consistently unless you are executing your trades consistently, and you cannot do that unless you have proper expectations on how much you might lose. As a trader, you are a risk manager first and foremost. Profits come second. You do not have a choice, so you must accept it. If you lose too much money, then you do not have funds with which to make money. No trading account, no profits, period. The best traders in the world are fantastic at this. The next biggest thing that you can do to make the biggest impact in your trading going forward has to do with understanding the numbers behind a profitable trend trading strategy. You see, if your expectations are out of alignment with what you can expect in reality, then disappointment and frustration will be the end result. In trading, there are generally 2 types of strategies: scalping and trend trading. Scalping requires much more trading, work, has tighter margins, and requires you to be very accurate. Trend trading is much more flexible, not as hard, and generally provides much higher profits. Plus, all of the best traders in the industry whose names you would recognize typically tend to be trend traders. So that is what we will be discussing here. But did you know that the average trend trading strategy only wins 30% of the time? You heard that right. That means that you can expect to lose 7 out of every 10 trades that you take on average. And don't worry, it gets worse before it gets better. I say on average because with the way that probabilities work, there is no order that those losses or wins will come in, and it is not out of the possibility for 10 or more trades to be losses in a row. If you've been trading and trying to avoid losses, then I hope this really shakes things up for you. This is particularly why trading small when you're starting is so important. The more your losses eat into your account size, the harder it is to keep your emotions in check, the harder to execute well, and the list of the bad goes on and on. But when you trade small and you know what to expect, then your account can easily withstand the losses and you can begin to shrug them off because of what I am about to explain. I know trading small can seem like a waste of time, but I promise that you will waste more time trading large and being ineffective in your development rather than trading small and focusing on skill building and results. The good news is that with a trend trading strategy, your profits have the ability to far exceed your losses. And so that allows you to lose more often than you win because one big profitable trade could make up more than several of your losing trades. The most common profit target I hear floating around traders is the arbitrary 3-to-1 reward to risk ratio. Why is this so common? Because if you're making 3 times the size of your losses consistently when you have a winning trade, then this should cover your losses and you can begin to turn a profit. Do you see how if you do not know this information that it can actually prevent you from becoming profitable? Because if you are trying to reduce the amount of losses you have, then you are screwed from the start, my friend. And if you are trading too big and aren't aware of your expected loss percentage, then you will never be able to stay consistent long enough to truly see your real trading results. Once you are armed with this knowledge and begin to implement it into your trading, only then can you begin improving your results. One final piece of advice here. Instead of avoiding or dreading losses, you should embrace them and focus on limiting the amount you lose, while understanding and knowing that each future loss will potentially and eventually lead to your next winning trade. This will keep your winning mindset strong and your emotions at ease. So the moral of the story is, trade smaller, win bigger, track your results, and you will start to see improvement in no time. At this point, you might be thinking, okay, trade smaller, check, you convinced me. But Chris, how in the heck do I just start increasing the size of my profits? Well, it is now time to move to part 2 of my presentation to begin to break down my strategy and show you how I use it to make consistent and large profits. One of the most critical aspects of trading success and fat profits is a superior ability to anticipate and target price action. So many new and experienced traders are focused on reacting to price movement, while professional traders are proactive, seemingly knowing where price is heading towards, going to, and moving away from. How is this possible when most of the time that you are just hoping and praying that price will move in your direction? How is it that the pros know exactly where they want to enter, where they will get out if things go wrong, and their profit targets ahead of time, while you are just hoping that you don't get stopped out on the next trade and lose money? Well, once you have the fundamentals down, the key to unlocking a superior understanding of price movement is mastering value, which is a concept that most have never heard of, much less than integrated into their trading. I am telling you that this is the game changer. Understanding value will unlock trades where you can target 5, 10, and even 20-to-1 reward to risk trades, which will skyrocket your chances of becoming consistently profitable almost more than anything else. If price action is the how, then value is the why. Why price action is going higher or lower and to what prices. Kind of like the current under the surface of the ocean, you can't see it from above, but you know for a fact it is in control of the direction of the water. The tools we professionals use to track and target value allow us to see the current that is happening underneath the price action, and I'm about to give them to you. When I think of an ideal strategy, here are some of the core things that I look for. First is consistency. Does it help me to recognize opportunity effectively and consistently? In other words, can I open up my chart and see what levels the market is making important decisions at and that I can enter around? Second is market direction. Am I able to see clearly which direction the market is moving so that I can follow the trend? And third, does it show me where I can consistently enter and exit the market so that my losses are limited and my profits maximized? These are key and very important distinctions of a winning strategy. So let's discuss how trading with value brings them to the table. Now, there are 2 types of value. 1, existing value, and 2, developing value. Let me show you how this is about to change your trading forever. Existing value reveals a few key levels that are created in every market every single day. As I will show you here in a second on the charts, not only will these levels help you identify when your market is trending, but when it is range bound and consolidating. These levels are critically important no matter which time frame you are trading. Not only that, but those levels that were created on previous days remain important and can be targeted in the future for huge potential returns. This is called the market profile, which is what I refer to as existing value, since each day creates a new profile, and we will be using the previous day's profile information to make trading decisions today. Now, if you have never heard of or seen market profile, I know that it can look a little intimidating, but don't worry, I'm going to show you exactly how to easily extract these levels from the profile and put them on your chart. What market profile does is it shows you the accumulated time that price stays at different prices, and the longer that price stays at a certain price or range of prices, the more important that area is. What that tells you is that those areas were agreed upon by market participants as fair value for that particular period of time. These areas create a lot of the support and resistance levels you can see on price charts. What your usual price chart does not show is the underlying context surrounding the support and resistance that makes all the difference. Oftentimes on price charts, you will see areas of consolidation before a big move. And like I mentioned, those are the areas where price trades in a range as neither buyers or sellers are willing to commit to higher or lower prices. Once price breaks out of that range, regardless of why it happens, people are stopped out of trades and will begin chasing that new direction and momentum. That is essentially what is happening here, and it is how trends begin on any time frame. Though in this training, we will be focusing on the trends that develop on the daily time frame that you can use to get positioned for a day trade or a swing trade. Now, there are two important things that you need to know about market profile and existing value. Number one, the value area. This is 70% of the previous day's trading activity that occurs within the value area, and this part of the profile is auto-generated in the tool. When the market is trading within a value area, I want you to think of it like the market is consolidating, meaning generally range bound with not a lot of opportunity. Now, you can trade the smaller trends within the value area, but the most powerful moves in the market happen when price breaks out of the value area and begins trending. This is when large volume and large traders get involved and can really start pushing the market and your trades to crazy profits. Best of all, I'm going to show you how to position yourself before these large market moves to reap the largest potential profit. Number two, the three key levels within the value area. Those three levels are called the value area high, the value area low, and the point of control. Value area high being the highest price of the value area, point of control being the most traded price within the value area, and value area low, as you probably guessed, being the lowest price within the value area. Once you start watching these levels, you will notice how they act as strong natural support and resistance on price charts. Your typical trader reading charts has no idea these levels exist. With this knowledge alone, you now have a big advantage over the majority of traders out there, and we are just getting started. Now, it is easy to look at the market profile and say, wow, there's a lot going on here. And you can go much deeper within the building blocks of the profile itself. But what's most important is these three levels, so I want you to stay focused on that. Keeping things as simple as possible is a recipe for success. So here are three simple rules around using these levels to catapult you to trading success. Number one, when your market is trading within the previous day's value area, then the market is currently consolidating and will generally trade within that value area until it breaks out higher or lower. Number two, when the market breaks higher from the previous day's value area high, then the market is beginning to trend higher. If the breakout does not fail, then this can result in a strong sustained uptrend where the market is seeking value higher. When the market breaks down lower from the previous day's value area low, then the market is beginning to trend lower. If the breakout does not fail, then this can result in a strong sustained downtrend where the market is seeking lower value. Simple, right? This is true for every market day in and day out. Now that you know which levels are super important and can actually spark a sustained trend, it becomes a much simpler process to target entries with killer reward to risk profiles, and you don't have to sit around watching the market all day because you know these levels before you start the trading day. The market will move to and from value area to value area, and you can target these value areas within previous profiles earlier in the week, month, and even year. You can also create weekly profiles to create even stronger levels to trade from and target. Most major trading platforms carry market profile as a trading tool and can easily be implemented on your chart. Now that you know about these super important levels of existing value to trade from, which are insanely powerful on their own, how do you actually decide how and when to enter and then exit? What if you want to trade between the levels? What if there are a way to tell when the market was likely to continue trending and help identify when the trade is working or not and when you should exit? If existing value is why we trade certain areas, developing value is how we trade it. Welcome to the second part of Trading with Value. developing value. For this section of the trading, the tool we will be using to guide us is VWAP, which stands for Volume Weighted Average Price. Now, you've probably heard of VWAP as it is much more popular than Market Profile, but most traders fail to unlock the value of this tool for two major reasons. Number one, they overcomplicate using the tool. And number two, they try to create a strategy with hard rules using only VWAP, which isn't what it was designed for. Let me tell you, Market Profile and VWAP are a match made in heaven, and virtually no one is using them combined. So welcome to the cutting edge of profitable trading. As great as it is to have meaningful levels to trade from that existing value gives us, it is just as important to have tools that help give you confirmation that the trade is working out and when you might want to take profits or exit the trade early. And that is the power that developing value brings to the trading process. Trading volume is what moves markets, and the bulls and bears with the most conviction are the ones who win the immediate directional war. VWAP gives us a visual as to how well that war is playing out, as well as additional immediate levels to watch to help us position for the move that we are interested in trading. Since volume changes with each day, these levels adjust with the volatility of the market, so that we can instantly adapt to what is happening that day or in any time frame that you are trading. It will supercharge your ability to read price action effectively. Using VWAP with Market Profile gives your trade ideas context that will make your entries, stop positions, and profit targets crystal clear. So let's break down the most important aspects of the VWAP indicator. First, you have VWAP itself, which gets anchored to whatever time you desire and can be set for whatever time frame you desire, depending on when you trade. Today, I will be showing you the daily time frame since you can day trade or short-term swing trade from this information. All of the buying and selling trading volume is accumulated and develops as the day progresses. This provides an important point of reference, and I consider this the developing point of control. Next, we have the standard deviation bands that extend from the VWAP, which I consider to be developing value. So just like the Market Profile has an established value area, VWAP gives us a developing value area. So consider this like a bubble that contains price action, and only true buying or selling pressure can break outside of these bands, confirming a solid trend. Are you beginning to see how these two tools work together to give us a beautiful insight as to what the market is currently doing and trying to do? Like I mentioned, I consider price action within the value area to be range bound or consolidating. And with VWAP, you can see how well bands give us perfect insight as to the limits of that consolidation, as well as clarity once the market begins to transition to a trend. And then once we move beyond the existing value area, then all bets are off. The best and the strongest trends form this pattern over and over. And now that you understand the overall structure of the market, you can target levels outside of the current day that produce these monster returns that can crush the small losses that you accumulate, almost forcing you to become profitable. In my opinion, combining Market Profile and VWAP creates an unbeatable combination.
All right, so I just wanted to briefly go over everything I've been explaining on the charts, and let's go ahead and start with the higher time frame. So this is your weekly chart, right? So this is something that if you're a swing trader, you might be interested in using, or if you're doing analysis, a day trade, and you're trying to figure out the trend and the momentum of the market, where you're looking for entries, you're looking for major turning points in the market that you need to be aware of, kind of your context, is your higher time frame. So what we're looking at here, this is a deconstructed market profile. It's putting these blocks in its own column so that it just gives us a representation and gives us a visual of exactly what's happening. These are 30-minute blocks, and so they represent 30-minute blocks of time. And so you can see the momentum of the market and exactly how it's working and interacting with these levels, right? So again, we have the value area high here, point of control, value area low. So what we're looking for is how the market is going to interact with it. Now, obviously this is looking in the past, but I just picked a random day. I just wanted to give a quick example because you see this all the time. This happens every day and every week. The market interacts with these levels quite accurately. You're able to anticipate what's going to happen in the market based on how they interact with these levels. This is the NASDAQ futures market. So this trades 24 hours. It's going to start Sunday and it's going to run all the way through Friday. Beginning of the week, opens up, comes down, tests this area, right? Closes just outside of the value area high, comes down, tests this level, attempts to move higher, you get a small pullback here, and price breaks down to the point of control. Now it's generally when it's coming back, it's testing the strength of the move, right? There's going to be buyers and sellers at all of these levels. And so what we want to see is if the trend is going to be higher, then we would want to see price come back down to this point of control and then get pushed to new highs and have the momentum to increase the upside. But that's not what we see here. We see that there are some buyers here, but the buying strength is not enough to push it up to new highs. Comes through, makes kind of a double top here, and then price fails to the downside. Then we're looking for it to come back down, maybe come back down and consolidate in this area, or to even test the value area low and see how the market interacts with that level. Momentum moves lower, it'll pull back here, a bit of consolidation, and then price breaks down to the downside. We've got a multi-week trend to the upside. You could say we're looking for it to fail. This would be a nice pullback in the midst of a long-term trend, and so we're looking for it to fail at the value area low. We don't want it to, if we believe that the trend is going to continue, we wouldn't want price to continue to gain momentum to the downside here, right? That would be indicative of a trend reversal, something bigger happening on the larger time frame. But as of right now, it's just kind of a well-orchestrated pullback, buyers taking profits, what have you. So price comes back down to the value area low, it finds support here, and then price is rejected back to the upside. So you can see, if you switch this over to a 30-minute chart, you're going to see something similar here. It essentially cuts out all the noise and makes it very, very obvious as what's happening. The context of the trade is very important. We see that price has failed. We've had a nice pullback. Price has failed at the value area low, the short-term trend, and the momentum has reversed. And so now that would be like an ideal area. You would have confidence to the upside again instead of kind of catching the falling knife in here. Price continues the uptrend, and so again, this is several days worth of information here, but it also gives you a good representation and visual of the long-term trend itself. Great for swing trading, and again, like I mentioned, giving you context and valuable information for your daily trades. All right, so let's switch over to the daily time frame. And so what I want to do is just give you an idea of exactly how this works. And again, these are going to be your home run trades, as I've explained and shown you how that happens. It's also important for you to see how this works on an average day. So when things are going really, really well and the trends are being pushed, like I mentioned, once they move out of the value area high or value area low, combination with the longer term trend, i.e. that it's not a consolidation or it's not a pullback within the daily trend or the weekly trend, I want to show you how price actually interacts with these three levels, right? The value area high, the value area low, and the point of control. And so as we see here, we can see that price is moving, right? You can see the VPOC here is slowly moving to the upside, right? So and the value area is moving higher, so that's indicative of a trend. Let's just take a look and see how this transition plays out, right? So we're gonna break this down. So we see here, price closed within value. This is the beginning of the day, came up, and it blew through the point of control, came up, headed towards value area high, a little pullback here, could not get back down to the point of control, or it stopped right at it, and then it just took off from there, right? Blasted right out of here. So this becomes a high confidence momentum play to the upside, right? As long as price doesn't come back down and fail back inside of the value area and continue to consolidate, then we're following momentum to the upside, right? The trend is up, it's breaking out to the upside, and so this is where you're going to get your largest move. And so that's exactly what we see here. And again, these are 30-minute blocks, right? So we're just looking, so this is again a bit short-term momentum, or this is your primary momentum if you're day trading. We get to pull back here, and price continues. Instead of the strong momentum here, we see that price starts to struggle to the upside a bit. Momentum slows down, and then what we see is a lower high made, and then a price reversal. And so then kind of to the extreme, things reverse hard. But what's important to look here is we want to see, right, if we're looking at the context of the overall situation and how well the trend is moving forward, how well it's developing, right? We want to see price can potentially come back to value, right? Test these areas, but then we want to see it continue higher. And that gives us these levels to target. If the path of least resistance turns to the downside, right, then we can start targeting these levels. So that's exactly what you see here. You can target the level here. If we, we reverse our position, we go, holy cow, big volume came in and a strong reversal is happening. And now we get positioned here. We target this level, and this level. That's exactly what you see. And so the fact it was able to come back down and tests the value area low, says, okay, well, maybe this isn't such a strong trend, or maybe things are beginning to change here. Things are beginning to shift, right? Okay, and so the rest of the day, you kind of see a consolidation in the value area here. Essentially, the day's information is done. We're back into value. There's no high confidence trade higher or lower at this point. So now let's move to the next day. And so you can see that the trend shifts here, but just know that we don't know that yet, right? We're looking at this matter-of-factly, as if we had finished the day in value, and then we can see where we're going to be opening, right? So the next day starts, we start to trend lower, and it blows right through the value area low, okay? So this says that we are beginning a more serious pullback on the daily time frame. And not only that, remember, once it breaks out of the value area low or the value area high, that becomes the higher confidence trend trade. Even if it's against the trend, that is still where momentum has developed the most strength, and it may be limited in size of the trend as compared to if it was in alignment with the longer term trend, but it still is going to be the most powerful move available, and the same rules apply.
All right, and let's review a trend day as well. So we've got the uptrend is strong at this point. So now we've closed outside of the previous day's value. And so now we are seeing a pullback here, back towards value, which is common. Nothing goes in a straight line. And so we're gonna get these pushes and pulls towards and away from value. And so we've obviously had a nice strong update the previous day. So now we're getting a pullback into value. So we're keeping an eye on that. Price pulls back through the existing value area high, and then back down into nice, cool, calm, and collected, down into the previous day's VPOC, right? Just showing typical profit taking. And so once we see that price move down below, slightly below point of control, we see that there's buyers here. Price strongly moves up against that. We get a little pullback here, and then price just kind of takes off. So let's take a look and see what that looks like. Okay, so like I mentioned, price slowly moves back down towards the existing point of control, comes down, finds support there, cannot really move below it, and so we get one last move down here. Market opens up, strong move to the upside, breaking above that value area high, showing a strong move back in the direction of the trend. We get a pullback, which gives us a good risk reward entry area here. We get another move to the downside, which fails again, and then price is pushed outside of the developing value area high, and we see that we're finding support here, giving us again the high confidence trade to the upside. And so at this point it just becomes a nice, smooth, again very profitable large trade to the upside. Again, we've moved outside of the existing value, and once we've moved outside of the existing value, again in the direction of the trend, we find these really, really strong moves. But we were able to set up the trade nicely because we understood the context behind exactly what was happening behind the existing value area levels, and then we're able to watch and see how well the trade develops, and then base our trade decisions and our aggressiveness based on that as well. There are several important and defining moments in my trading career that I distinguish as being the most pivotal to consistent profitability, and value was one of the last and by far the most powerful. I contribute it to my success more than anything else because from the point of value, everything else can be figured out. Imagine it now, you're trading going forward, having this at your disposal, being able to open up your charts and know exactly what the market is doing. Once you learn to see and read these patterns, which are not difficult by the way, but there is a process to it, then your number one job is to create a plan and trading rules that will capture part of this movement as profit. Simple, right? That's the point. The process of profitable trading is in fact simple, which is what draws you in. But for some reason, executing the information that creates the desired results that you want most is almost impossible when trying to do it on your own. Or sometimes it feels that way, right? As important as it is to have a strategy with great potential such as this one, in order to maximize that potential, to trade consistently profitable, and have the confidence to consistently execute these trade setups and ideas effectively, your whole trading system and all of its pieces must be working together well in order to truly realize your trading potential and your ability to build wealth. Your strategy itself is just one very important piece among other aspects, things like a profitable mindset. Yes, it's a real thing and it's way more important than you realize. The numbers behind what will make you and keep you profitable. Recognizing pullbacks versus trend reversals, risk management, position sizing, effective trend trading, efficient stop placement, maximizing profits, minimizing losses. The list goes on and on. Your trading profits are a direct result of your knowledge, consistency, and your overall trading plan. If there are any undeveloped or missing aspects within that plan, then your chances of making life-changing profits goes down to zero. I call it the 3 pillars of successful trading. And like a tripod, if your mindset, skill set, or your strategy is lacking, then it creates weakness throughout your whole trading process. I think about it like this. What if you had a puzzle, but you didn't know what the finished puzzle looked like? Or even if you had all the pieces? That, my friend, is a nightmare, and that is the path that you are currently on. Like I said, I want you to be successful, and as long as you have not addressed those gaps in your trading development, you will continue to struggle, even with this super awesome new knowledge of value that brings you new potential to become a profitable trader. At the end of the day, it is just a tool. It will not be the key to your future trading success until you take care of the most important aspect of your trading, you.